Good afternoon, everyone. It's a pleasure to have you all here with us on the first webinar that we're doing with MAGNiTT. Really, this is the first in a series where we're trying to empower you as ecosystem stakeholders on how to navigate what is becoming an ever-evolving startup community here in the region. With MAGNiTT, we've become one of MENA's most powerful startup data platforms. And as an entrepreneur myself, we thought we'd start the series with a session that kind of looks at a very hot topic of fundraising. The title of the session itself is 5 Tips to Discover Investors Relevant to Your Stage in MENA. And I'm going to share some of my personal experience from our fundraise last year and kind of learn on how you can use the tools of MAGNiTT to help you when you're in the fundraising exercise. The actual structure of the webinar is 30 minutes. I'd like to try and do as many Q&As at the end to allow you to share questions. It's the first time we're actually using Zoom, so allow us to work out how that Q&A exercise will work. But before we get started and allow a few more people to join, really why we thought this is important now as a webinar series is that there's a lot of information that we can continue to share with the ecosystem. And the best way of doing that is not only through video, but also audio to be able to share some of the insights, learn from you. I'd love to take this opportunity to get feedback, not only on this session, but on what are the main things that we're looking to try and drive and change here in the ecosystem with what we're doing. MAGNiTT's now been around for 3 years, and we're really using what it is that we're building as a platform, as a tool to empower you, the ecosystem in this space. Also welcome suggestions on future topics that we should look to try and address. So going into the presentation itself, what we're looking to do is to address some of these points on the slide. Where are we at the moment in terms of the ecosystem? What are some of the tips that I would like to share with you for this space? How does the funding landscape itself look like? And which are the investors at your stage that are particularly relevant that you should be speaking to? And how can you use the MAGNiTT tool itself to empower you with those decisions? Just as a starting point, I think it's important to kind of take stock of where we are in the MENA region. I think last year was a turning point in many ways. We saw in 2018 more investments made than any previous year, which is extremely encouraging. And while it wasn't the highest on record ever because of investments made in Souk and Kareem, you'll have seen in all reports that we generate that we separate out those Souk and Kareem investments because we think that while they're amazing startups, they somewhat skew the underlying data. And it's great to see this almost hockey stick acceleration in the amount of investment that's taking place in startups in the MENA region. And 2018 has already kicked off to a very strong start. 35% of all funding has already taken place, and 31% of all deals year to date as well. So one of the things that's important to note is, when was this actually taking place? Well, we saw in Q4, the majority of investment in 2018 was taking place at the end of the year. Several different reasons for this, including many of the existing VCs closing funds and deploying capital, as well as larger funds investing in that space. And that has continued into 2019. And I think that it's important to see that there were large investments that are taking place. What you want to see as entrepreneurs when you're fundraising is that the market continues to mature, that more startups are raising significantly larger rounds, showing international interest. And there's no bigger international awareness than the Kareem Souk exit. I don't want to go into that in too much details, but what is great is that that shows momentum for the region, especially in the size of the exit. And what that does is raises awareness. And we've already seen that as MAGNiTT to the international community. It provides founders confidence that the region has a lot of success. And it also provides, ultimately, while we might not see the cash come in the immediate short term, you'll see that VCs who are closing their funds and new VCs be able to go to LPs and raise those funds on the back of the success of the Kareem exit, because ultimately the VCs need to have exits to be successful. And so the more fundraisers that we see at larger ticket sizes is extremely beneficial for the ecosystem. And in 2019, you've already seen many new Series A and Series B investments, another indication of the maturity of the startup ecosystem, whereby you're seeing many startups that started in 2014 and 15 continue to mature to later stages, requiring bigger ticket sizes from regional and international investors as the ecosystem grows. So I want to take this opportunity right now to give you a couple of tips that I had based on my experience and why that's relevant right now in May. Number one, I think it's important that you cannot replace the importance of homework. Fundraising is hard, it's time consuming, it took us 9 months to complete, but there's certain things that you need to do when it's looking at trying to understand how best to position yourself. Different startups in this space will have different needs and requirements, and you need to understand where you are in that fundraising journey. Are you an early stage startup, a Series A stage startup, or a late stage startup? Once you understand your needs, you can begin to build a story around that. I'm not going to use this presentation necessarily to explain what you need to do in a pitch, but fundraising is almost all about storytelling as a founder. And how can you identify for investors the problem, the solution, the size of the market, why is your team the team that's going to make it successful, and what your secret sauce is to being able to achieve that. Then it's important about identifying your target investors. Now, much of the rest of the presentation will be around this, how you identify them, what you need to look for, and how you can use the tools to do that. But it's very important to do that when you're building out your fundraising exercise, because it's not going to be a shotgun exercise and speaking to everybody. Certain investors are the right investors to speak to. A second tip is prepare your documents. Now, yes, you need a pitch deck, and in fact, you need multiple pitch decks. There's a pitch deck you need for an introduction. There's a pitch deck that you may need as you begin to warm up that conversation, and there's a final pitch deck that may include financials. And you need all the other documents as well. It's common to be asked for a 2 to 3 year financial model. Often these numbers are there as benchmarks and to use as a yardstick that you've done your homework to understand the marketplace in terms of revenue as well as cost. But you also need operational documents. Have you got your trade license? Have you got your term sheet? Have you got your CV, passport, etc.? All of the documents that are required to be able to share in a deal room that can be given to investors to minimize the friction towards actually raising funds. And I think the third point is the most important for me, because this is something that I learned in my fundraising exercise. A little story that we actually got our term sheet after 3 months of discussions on the middle of July. And through all of that excitement, we went out to speak to all the other investors that committed and realized many of them were actually away, many of them were not responding to emails, and many of them didn't want to get back to this discussion until September. That's why I want to have this discussion now. It's not ideal to be fundraising, especially from regional investors, in the summer period. But that doesn't mean that you need to down tools. When you look at all the other 4 tips on this presentation, especially on the due diligence and the preparation of documents, now is the time to be getting all of these documents and preparation, story, and practicing in place so that you can then go on to close the deals after the summer. Somebody's just asked the question, why can't you fundraise in the summer? I'm not saying that you can't. It's just not the best period. Many of the investors will be away. Traditionally, the heat means that people are less responsive than the rest of the year. And the ecosystem here in the region is effectively September to June. So it's just something to consider when you are fundraising. Another thing is that September becomes a peak where you have many of the industry events. It's great to use the summer period to prepare yourself to attend these events and identify the investors that you want to be reaching out to. Which leads into my next point of it's better to have a warm introduction than a cold one in most cases. Now, what does that mean? Find people who are common relations to the investor community. I'll come on to how MAGNiTT can help you with this, but effectively get somebody to make an introduction. And an introduction email should not be asking for funds. the best way of doing this is to ask for advice. And it goes back to how to identify investors. When you're looking for investors, look at their portfolios, look at their profiles, look at which areas they invest in and who they will be investing in historically, as well as their mandate, and see if that fits with you. And then when you go on to connect with them, you can understand and use that as a hook as part of the conversation, i.e., who are the best people to be speaking to that are in fintech and what are the investments that they've done. And a final tip that I have, and again, I give you a small story, is that continue to keep the investors updated as you go through the fundraising process. One of our own investors closed the round after having said no 6 months earlier. And what I did was send an email every month, no longer than 4 lines, highlighting key KPIs and achievements without a commitment requirement for a commitment to respond, but purely highlighting what were some of the successes that I achieved. Because of diligently repeating this email to them month on month, at the end, they came back and said that we were impressed with your efficiency and your follow-up, that we wanted to actually participate and that your numbers grow. So don't discard investors that say no at the beginning, but don't expect that they're immediately going to respond. Now, to come on to the specifics of what does it look like in terms of the funding landscape? Well, ultimately, 2018 saw 159 different investors invest in MENA-based startups in the region. Interestingly, 47% of those were new investors that hadn't previously invested, and 30% of those came from outside of the region. Again, another indication that there's some interest in the region from outside. And we show that on this chart, where we see more investors, while the percentage remains the same, the number of investors from outside of the region growing. The Kareem story will continue to help this. And we have seen one of the questions that just came through, does MAGNiTT attract international investors as well? Well, actually, we're seeing a growing interest from Asian investors in the region and European investors in the region. And I'll come on to discuss that later in the discussion. In 2018, there was many investors across the landscape that have been investing, both accelerator programs as well as investors. And this is publicly available, and we'll be sending it post webinar, which is the MENA 2018 investment report, so that you can identify who are the more active investors in this space. And already in 2019, we've seen many investors make investments, both in the accelerator space, as well as in the VC and private family office space. We are also seeing the phenomena of more and more family offices come to the region and from the region interested in startup investments. So to the question of the title, how do you identify investors that are active at your stage? So as one of the tips that I shared with you, it's important to identify where you are in the investment process. Only then can you really properly identify the investors that you should be approaching. And the typical route is at the very early stage, friends and family and angels. Those are people that give smaller ticket sizes, and then potentially accelerator programs for companies that have MVPs that they can help support, that then go on to seed, Series A, Series B, and then growth. I'll go into each of those sections into more details. The one that I'd like to start off with is with angels. A common question that we get is, how do you identify angels in the region and approach them? There's no trick to finding angels, except for the fact that when you're attending events and identifying startups also through MAGNiTT that have received angel funding, to approach them. And actually, we've just launched, as part of the MAGNiTT platform, the People tab, where you can actually filter by angel investors and send them a message and connect, so that you can reach out to them, highlighting your pitch through MAGNiTT and their profile, and asking them if you would like to connect. Again, ideally asking for advice and not asking for investment. But as you go through the channels, there has been a growth in the number of accelerator programs across the whole of the region, which has been fascinating. Recently, you saw the MISC Accelerator program that was managed by 500 startups that has taken on a cohort of 19 investors going through startups going through a 4 to 5 month process of acceleration. Accelerators are often ideal for startups that have an MVP or pre-MVP. Even WAMDA X has now gone for idea stage startups. These programs help you through the exercise of working through the model and team structure of your startup. Another very active accelerator program is Flat 6 Labs that has cohorts across many of the different countries in the MENA region. As you continue to develop, there are different VCs that play in this stage. The first, for instance, is 500 startups. In fact, 500 startups remains one of the most active investors across the whole landscape. Now, they have an interesting model where they invest $50,000 to $150,000 tickets traditionally for early stage investments. And they've just confirmed that their mandate of the fund of $35 million was closed. But they're not the only ones. You're seeing many different early stage investors. So now on the next couple of slides, we highlight just the top 5 investors by stage across all 2018 investments and 2019. Now, interestingly, the average ticket size for a seed stage investment across that period was $630,000. But when you start looking at the higher end, you're seeing more confidence with startups at the seed stage raising bigger ticket sizes. I think if you did the exact numbers 4 years ago, they would be much lower and there would be much shorter amount of supply of investors to be speaking to. And this again goes to the point of valuations and how much and maturity of the ecosystem and how far we've come. When you look at the Series A stage, number one, again, the average ticket size at 6.8 is considerably higher to research that we did 2 years ago in this space. Again, this is reflecting 2018 and 2019. But interestingly here, you're seeing players like MEVP, WAMDA Capital, the likes of Biko Capital, as well as Riot Ventures in Saudi Arabia, come and play at this stage. Some of the more traditional players like MEVP, WAMDA, and Biko that used to play at the much earlier seed stage are now going later in the investment cycle to play at Series A and Series B to support startups as they mature closer to the exit of the investment cycle. At the later stage, we're also seeing an acceleration, number one, of the number of investments and also of the size of investments. Even when you exclude Kareem, you saw the big deal in Property Finder, as well as Wadi and Mum's World, and multiple Series B investments that have taken place in 2019 alone. Again, there is a difference in the number of startups, investors that have been playing in this space. You see the names, again, of WAMDA Capital, Biko, and MEVP that have now closed new funds that are looking to focus on later stage investments. Again, why do I stress this? Is because if you're an early stage startup, it is less likely that these VCs are now going to invest in this space. And you need to identify who is currently investing at the early stage. And you can also see the likes of Global Ventures, a new fund that was set up only recently, making 2 investments at late stage, as well as many at Series A. Nest TV, which may not be the most active by number of deals, is one of the largest investors by the size of tickets that they're investing at. And again, I want to highlight that you're seeing a growing interest from international investors in this space. And this is great. Predominantly, they're making investments at the later stage. Now, when you're talking about late stage investments, because of the size of the tickets, we go back a slide and we see that this is traditionally 20 to 30 million, if not the 6 to 5 million. You are finding it harder to find VCs in the region that can complete that ticket size as a single investor. So it is not uncommon for international players to come into the space. A second phenomena that we've noticed is that many of these international investors, especially coming from Asia, are looking at their portfolios and realizing that there's a lot of synergy that they can make with similar companies from the MENA region, either by investing directly into them or by finding portfolio companies that can match them to have early stage acquisition discussions or connections through small stakes in the companies. And this trend of merger and acquisition is something that we anticipate will continue into 2019. The last section before I open it up to Q&A is around how we can support you. Many people come and say, we need help. Anthony has just messaged and said, we need help in pre-seed angel investment. How can you help us identify startups at different stages? I just want to highlight and take this opportunity to share some of the ways that MAGNiTT can support you through the platform. Number one, we go back to due diligence. How can you identify investors? Using the directory on MAGNiTT, you can identify investors, go through their profile, looking at the geographical focus, their industry focus, and what they do, and look at their portfolios. This can all be used, as I mentioned, to understand and build a relationship with the VCs to say, oh, by the way, we noticed you invested in a similar company. Can I get your advice on why you invested and how you grew their company so that it applies to us? Oh, we noticed that you apply heavily in fintech. We're a fintech company. What are the kind of things that you look for a scalable fintech company? All of these things can act as a hook when you make an introduction and build a relationship with the VCs in this space. Also identifying what stage they're at. The second thing is that you can actually then connect with them through MAGNiTT. Similar to LinkedIn, once you've identified an investor on the platform that meets your criteria, or this is also applicable to the people, you can then review their profile in exactly the same way and use your profile to connect with them. This will allow you to send them a message highlighting your profile, potentially sending them a pitch deck, or sending them a message to connect with them for a further conversation. We can't guarantee that they reply to every single message, but we're providing the mechanism for you to be able to actually connect to them. And what we've also launched as a process where you can apply to them using your profile on MAGNiTT. There are now 45 investors using your profile that you can send applications to. And it's very simple to do so. Notice the response rate on the right-hand side. As you go through the page, you'll see that you can actually send them, one second. As you go onto their page, you'll see all 45 investors, the response rate, identify the ones that you're interested in, and then apply. On their page, you'll see all the criteria that they are looking for in that startup. That's extremely important when you want to apply to them. All of the questions that you've already completed as part of your profile will then be submitted along with a few additional questions that they're looking for as part of the application process. Again, I'm going to go back quickly because we've spent a lot of time reaching out to the investors, and we actually noticed that there was a low response rate. We've now got to a response rate of 60% on the MAGNiTT platform, thanks to actually highlighting to you, the entrepreneur, what their response rate is, so that you can get, whether it's a yes or a no, a response to the application on the MAGNiTT platform. The final piece is staying up to date. MAGNiTT as a platform continues to grow, and our aim is to engage with you to keep you up to date. We share articles on a daily basis, but you can also subscribe to our newsletters, where you can get up-to-date information on all funding that's happening here in the ecosystem. This gets shared whenever there's a funding announcement. And we also encourage you, if you are fundraising and successfully fundraised, to share those announcements with us. That will be shared with the ecosystem to allow other people to also identify stages and investors who invest at different stages. Now, a final piece is that we're pleased to announce today a launch of a startup program through MAGNiTT. If you go to magnitt.com startup offer, which can actually be found on the pricing tab, for startups that create a profile on MAGNiTT and complete the form, will be eligible for 3 months free access to the intro package on MAGNiTT. All of these tools will allow you to do the due diligence that we mentioned earlier. Identify investors, connect with them, use the tools of the platform to prepare yourself as part of the fundraising exercise. And on top, we'll be offering a 50% discount to our upgraded packages of Pro and Enterprise if you would like to participate in those for the next 30 days. Somebody from our BD team will contact you as and when the opportunity, once you've completed the profile, to inform you that your account is active and if you would like to benefit from the 50% discount. This is very much just our way of giving back to the community so that they can use the tools on the MAGNiTT platform to your benefit. So I'm now going to open it up. Thank you for your time. Hopefully this was helpful. I've received some Q&A through the chat box on the platform. And if you have any questions, please do raise your hand or send us a question. So what do you think of angel investors that are new to tech startups with no tech experience? I think, again, that goes exactly to the point of doing your due diligence. A novice investor doesn't mean that they're a bad investor, angel investor, but they need to do their homework. It's always important to understand what value add an angel investor is able to provide to you. In many cases, it's not just cash, it's also the know-how. One of the things that I always say about angel investors is if you're a food company in the food space, then it's probably best to speak to somebody in a large corporate in food and beverage that may be interested in participating in your startup to helping it grow. So identifying angels that work within the space that you're in is one of the best ways of doing it. But one of the tips that I didn't give that is extremely important is always get legal counsel. One of the challenges that you do see when it comes to angel investors, especially in the region, is that they ask for terms that are onerous for startups. It's important to get a legal counsel to review these terms because you do not want to inhibit yourself at future rounds of investment because of terms that were agreed at the very early stage. If I come on to other questions. Somebody's put their hand up. Let me see how this works. Samir Kasim, if you would like to share a question, let me open that to speak. Samir? I think you're muted. Nope. Fine. We'll go back to the Q&As. So one of the questions that's I've actually been asked quite a few times is I notice most VCs are after tech companies, not in industry, energy sector. How can I find VCs interested in the energy sector? Look, I'm not going to sugarcoat this. Venture capital is a new industry, and to the extent whereby VC is not a charity. These guys are. It's a new asset class, and it's something that they are looking for returns that is different to traditional investment, i.e., real estate here in the region, portfolio management, or investments in banks. When it comes to this, many of the investors are looking for something that they can understand and grow. The venture space is predominantly in tech for the sole reason, or not the sole reason, but one of the biggest reasons is that they want scalable returns for their investments. And therefore, tech companies are the easiest to achieve those. Now, I'm not saying that you can't find investors that are interested in industries like energy or social or other areas. But in the region, the maturity of the investor community has meant that they're predominantly focused on areas around logistics, e-commerce, fintech, as well as other areas that are interesting to them for a financial return, because it's something that they can understand and scale. So when you're looking at investors and looking to take their investments, it's usually because they want you to scale into multiple geographies. And if your company isn't looking to do that in the traditional tech manner, it's very difficult for them to be able to solve for that. I've just received a question. What are your thoughts on the regional equity crowdfunding scene as a source of capital? Look, it's a very interesting question. I think that as something that we have explored ourselves, there are many challenges to the regulatory environment for crowdfunding. There are some players that have played in this space. You've already seen Eureka play in the equity crowdfunding space. You've seen Beehive do peer-to-peer for the more traditional SME lending space. I think that there is an opportunity in this space, but until the regulation in the region has allowed it for companies to cost effectively monetize a crowdfunding platform, it becomes very difficult to also market those propositions. Now, with the maturity of the ecosystem, you're seeing more angel investors and family offices want to participate in this space. Some platforms have got the formula right, others are working that out. So I think that there's still growth in this space. But I think that there's definitely an opportunity, but it's something that needs to have more due diligence to better understand. From your experience, will investors invest in startups they do not hear about or knew the founders where they were reached out to through email? Again, if you can use a platform like MAGNiTT to the extent where MAGNiTT is doing a proposal on your behalf, it comes with the fact that these investors are using the platform to actually access deal flow. When it comes to out of the blue emails, warm introductions, as we mentioned earlier, are some of the best ways of connecting with investors. And by a warm introduction, somebody making the connection for you so that you can connect with somebody already acting as a third party stamp of approval. But it doesn't mean that if you can write a good email where you're asking an investor for advice and not for investment, that you can't get a cold email to begin a conversation. Ideally, you don't go to the GP, the head. It's not necessary to go to a Danny Farha if you want to reach out to a Biko Capital when they have multiple associates or analysts. But getting a warm introduction or even identifying them. I'm going to speak quickly about events. There are a lot of events that are taking place across the MENA region. And many of the investors get swamped by founders coming and pitching them their idea. One of the tricks, again, is to go up to them, identify them, find a commonality, see why there is somebody interesting to speak to, tell them that you would like to speak to them for advice on your company. MAGNiTT is looking to speak to Danny because I would love your advice on one of the questions that I have about scaling my startup into new geographies. I noticed that Kareem and Property Finder were able to scale. I don't want to take up too much of your time now. Here's my business card. I'd love to get your card and grab a coffee or 15 minutes of your time at a future date. It becomes very hard for that person to say no if you're looking for advice. And that's my advice when you're speaking to investors that you're not aware of. And somebody's asked the question, what is the best approach to reach angel investors for early stage? Again, through events, you can identify them. Through MAGNiTT, you can identify them. But also, there are many angel groups that are worth reaching out to. DAI is an angel group that's very active here that have their own selection process for you to be able to pitch to. You have Cairo Angels in Cairo. You have Aqal in Saudi Arabia. I know of multiple angel groups that are being set up in Qatar, in Kuwait, in Bahrain. So the phenomena is that there are many investors across the region at different stages that may be worth approaching. When you have a co-founder, is it better to put everyone in a vesting schedule? Again, I can't answer this question specifically now without going into more details. The best people to speak to is a legal counsel. However, when you are a co-founder speaking to another co-founder, it is very unlikely at the very early stage that you give vesting for co-founding, because you're both going into it at the beginning. And vesting really only kicks in when you start hiring senior management that weren't the co-founders on the platform, and that you want them to have skin in the game over a longer period of time. Mohammed has asked, how can you be featured on MAGNiTT and send them a press release or the closing of a fund? If you go to the news tab on the MAGNiTT platform, we have now launched a new service whereby anybody who has a product feature or funding announcement that they would like to share to us need to complete a very simple form that we can complete, share us the information, and we will share that in the news as part of our exercise. All we ask is that you register your startup on the platform so that we can link the news to that information and a few other questions to be able to include as part of the exercise. We will be sending a summary after this call with some of these features that will highlight where you can find the information on the MAGNiTT platform. Regarding your statistics, approximately what's the percentage of startup funded from North Africa compared to the Middle East? If you go to the 2018 MENA Venture Investment Report, you will see all of the investments that have taken place across the Middle East and North Africa, and the percentage breakdown by geography. Separately, if you gain access to the Pro every month, as part of the subscription, you gain access to a dashboard that highlights all of the investments that have taken place across the region, who the investors were, and what stage they were funding. And that's something that you can use as a tool to identify for the Middle East and North Africa, as well as other areas. I know that we're now at 4:30. I will stay on for another 5 minutes for any other questions. People have asked, will we be sharing the slide deck? We will be sharing the slide deck, which you can download from the website, along with hopefully a recording of the webinar that we'll post in our report section of the website for anybody that would like to have this information. A lot of tech companies have the potential to become big, strong, and solid, profitable businesses, even though they might not have the potential to deliver a 500 million outcome for VCs. If we agree that these types of companies are not suitable for VC investments, how do you suggest they go about raising capital? Unfortunately, there's no simple solution to this. At the moment, either finding similar companies internationally that do businesses similar to you, that maybe want to having a regional outlook or regional footprint to their investments, is one way of being able to tackle the issue, by approaching those companies to take small percentage shares. The second is to look at corporate venture capital, whereby many of these companies who have interest in this space may be interested in taking small stakes or becoming clients. I mean, an alternative to investment is revenue, and being able to get large clients that can actually support the growth of your company in the absence of investment is another way of doing it. Or you find partners that act as dividend returns as opposed to venture investors in your company. But that's a completely different model to the venture capital model. That is what our focus is in this particular space. Have you any experience with social enterprises seeking funding? Any investors, VCs you recommend? Seems like a nascent concept in the region. Look, social entrepreneurship continues to be a key focus of many government entities across the region that are looking to support entrepreneurs in this space. The challenge with social entrepreneurship is that it's assumed that it's not a revenue monetizing platform. In fact, some of the best social entrepreneurs actually do make revenue, but support a social good. Sometimes the challenge is, given the maturity of the ecosystem here, let's be clear, one of the biggest challenges for the region is that many of the VCs in the region have yet to make returns. In the absence of returns, it's very hard for them to have a higher risk appetite for investing in startups. The Kareem example is an acceleration of more exits. Until you see exits, which is what I mean by returns, many of these VC funds have yet to actually return the investments to their LPs. Once we see more startups exiting and showing realized returns to their LPs, more of them will be able to create new funds. And no doubt, as they build out new funds and have a risk appetite that is bigger than previously in this space, they will begin to invest in the social space. The alternative is to look for social investors. I think, again, on MAGNiTT, you can find social investors in this space that are looking to participate. But if you can find other startups similar to yours in the social space and identify the startups who have invested in that space, those are the people to reach out to and can be used as a hook for warm introductions. Another alternative to investment is grants. Many large institutions like the IFC, the World Bank, etc., do provide grants for social projects, but you need to fill out a process with those institutions to see if you're eligible. How long on average should it take a founder to send documents requested by an investor? Example, financial business plans. Again, at the beginning of the conversation, we said that the important thing is to do your due diligence upfront, on the assumption that you have all of the documentation and a deal room that you're able to share with individual investors. The actual time for a founder to send the documents should be very quick. Investors love people that are diligent, professional, and able to reply to their questions in a time efficient manner. Having all of those tools and being able to send those tools time effectively reduces the friction to you getting your check signed. Now, it doesn't mean that they're going to be responsive. In fact, many investors here, look, if you're a hot deal, people are very quick at being able to reply to your investors. Endure Capital, Tariq Fahim mentioned at the 500 retreat, he was able to close a deal in 48 hours because he loved the startup. If the startup needs more due diligence and time, the response rate from the investors is somewhat longer. And that's something that you just need to accept is part of the exercise of fundraising. For an early stage investor, does the closing rate low when raising with a convertible note? Historically, maybe, but 500 Startups has really come and normalized the concept of having convertible notes here in the region. It's become a lot more acceptable and easier. Why? Because it means that you don't need to go into the exercise of valuing companies. A convertible note effectively means that at a predetermined cap or discount, you raise an amount that will then convert at the next fundraise. It is not uncommon now, especially with the structures of having ADGM and other BVI entities, to use convertible notes for investment vehicles. And that's something that has become a lot more standardized in the region. Bootstrapping versus raising, my view is bootstrap as long as you can until you need to fundraise. The more traction, the more revenue, the more growth, and the more team members you're able to have on your pitch deck. And again, bootstrapping may be asking friends and family before like going to an actual venture investor or angel, means that you can show the traction to get better valuations and put yourself in a much stronger position before fundraising. And in fact, a great tip that was shared by Layla from 500 Startups at the Dojo program that we participated is, make sure you have 12 months of runway before you start the fundraising exercise. Nothing is harder than fundraising when you run out of cash. And therefore, it's important to be able to do that with runway. When you're desperate, the investor will know, because they'll need to know your due diligence exercise and give you a worse valuation than if you had a larger runway for the investment. I'll take one more question. Are there legal firms that focus on working with startups, and do you list any on MAGNiTT? This has been quite interesting. We are looking in the next report that we actually publish to identify the legal firms that have worked not only for the startups, but for the VCs as well, so that there is transparency in the space of the legal world. We hope to publish that in the H1 report, and also publish that on MAGNiTT. We don't have a list that's necessarily public right now, but in terms of startup-friendly legal firms, there are quite a few. Number one, Startup Legal, who are, for full transparency, our legal counsel. There is SME Law. There are multiple legal players in Saudi Arabia and Egypt that are playing in this space. And I think it's extremely important to have a startup-friendly lawyer that can guide you, that is on your side and not the VC side when investing in that space. And the last question that I'm going to answer is that there's quite a few Dubai angel investor questions. They're an organization that you can actually apply through on MAGNiTT that focus on angel investment stage, that have made multiple investments at the early stage. The reason they weren't reflected on the chart is because they weren't as many of the other early stage investors, but that do make angel investment stages. So I'm going to end it there because we're now 10 minutes over. I'd love to get your feedback. Please email us at info@magnitt.com or philip@magnitt.com. That's my email address, and I'll share that now in the group. We will send through an email to all the people that participated today with a link to where you can download the report, where you can avail of the startup offer, how you can submit a press release, and where the directories are for you to gain access to all of the investors. And if you have any questions, please don't hesitate to reach out. And I'd love to get your feedback on what you would like to hear for future sessions. This is a webinar for you, for us to use our experience to help the community on what it is that we're doing. Ali also, I'm going to copy paste this. Ali from Dubai Angels has also shared his email kindly. While you can apply to then directly through the platform, I'm going to share it for anybody that's interested in this space. Thank you very much, and we look forward to hearing back from you.